If you owe money to the IRS, you may feel stuck, stressed, and unsure where to turn. The good news? In most cases, the IRS offers payment plans known as installment agreements that allow you to pay debt over time and stop the scary collection actions like wage garnishments or bank levies. But here's the catch: not every taxpayer qualifies for the same type of plan. It really depends on how much you owe. This is the IRS Problem Solver podcast. I'm David J. Griggs, CPA. If you've got tax debt, payroll tax issues, or the IRS is coming after you, you're not alone. Each week, I share real strategies to stop collections, protect your business, and take control of your tax problems legally and effectively. Let's dive in. By the end of this episode, you'll know exactly which type of installment agreement might work for you, what the requirements are at each balance threshold, and some insider tips that can save you time, stress, and even money. So let's start with the basics. An installment agreement is simply an arrangement with the IRS that allows you to make monthly payments on your tax debt instead of paying it all at once. Now, this is important because if you ignore IRS letters and don't set something up, the IRS can and will start collection action. That means wage garnishments, levies, and tax liens. Getting into an installment agreement puts a stop to most enforced collection activity as long as you make your payments on time and stay current with your future taxes. Now, let's break down the types of installment agreements by how much you owe. 1. Balance is under $10,000, a guaranteed installment agreement. If you owe $10,000 or less, the IRS is required to approve a payment plan if you meet certain conditions. Payments can be spread out over up to 36 months, but the key requirement is you have to stay compliant with future tax filings. Between 10,000 and 25,000. That would be called a streamlined installment agreement, and it's still relatively simple. No financial disclosures required. You can typically pay over up to 72 months, and the IRS still expects you to stay compliant moving forward. Okay. Number 3, what if the balance is between $25,000 and $50,000? We have the expanded streamlined installment agreement. You can still qualify without disclosing your finances usually. The maximum term for this is 72 months. But here's the catch: you might be required to set up automatic debit payments. And here's an insider tip: if your balance is just above 50,000, it's often worth making a small lump sum payment to bring it under the threshold so that you avoid the extra paperwork. So, number 4, what if the balance is between 50,000 and 250,000? This would be a non-streamlined installment agreement. And this is where the complexity really gets stepped up. You have to provide the IRS with a detailed financial statement. It's called Form 433F. A lot of the agents that you talk to on the phone aren't even going to know what this is because typically you'll deliver this over the phone, verbally. Sometimes they might require it though. If you're compiling a packet to send to them, it might be worth your time to go ahead and fill out and sign 433F. But a lot of times, they're not going to know what you're talking about. The IRS will look at that income and expenses on the 433F, and sometimes your assets, depending on the balance the threshold here, and decide what they believe you can afford to pay. There is some negotiation possible here, but the whole process is a lot more intrusive into your personal life. And finally, balances over $250,000. This is going to be a lot more complex. For balances this high, cases are usually assigned to a specialized IRS unit or a revenue officer. You'll absolutely need to submit financial statements, bank records, and sometimes even asset valuations like an appraisal on your home. Tax liens are almost certainly going to be filed at this balance. It's probably going to be a requirement to get into a formalized agreement. And these cases really require a lot of careful handling and usually some professional help. Now, let's talk about some common mistakes and some tips that you can keep in mind whenever you're going through this process. Stay current. You must file all required returns before the IRS will approve any payment plan. If you're missing tax years, get them filed first. Don't default. Missing even one payment can cause your plan to default, and you'll be back at square one with the IRS. Watch for liens. Even if you're approved for a plan, the IRS may still file a tax lien, especially on the larger balances. This can affect your credit and your ability to borrow. And of course, penalties and interest. These keep adding up while you're paying, so the faster you can pay down the balance, the better. And here's a strategy tip: if you're just above one of those thresholds that I mentioned, like 50,000 or 250,000, paying down a small amount to drop below 50 or 250 or whatever the break point is, that can make your life a lot easier. Let me share some quick examples. I had a client who owed around $48,000. Instead of letting it slide into just over the 50,000 category, they made a $3,000 payment up front. That brought the balance down to 45,000 and qualified them for that streamlined process. No financial forms, no digging through bank records, just a straightforward 72-month plan. Contrast that with another taxpayer who owed 180,000. In their case, we had to go through the full financial disclosure, submit all the bank statements, and negotiate pretty carefully. It was a lot more stressful, but in the end, they avoided the enforced collection and set up an affordable payment plan. So the bottom line, no matter how much you owe, there is typically a way to set up a payment plan with the IRS that keeps you protected from garnishments and levies. But the rules change depending on your balance, and the higher the balance, the more complicated it gets. If you're unsure which plan you qualify for, or if you feel overwhelmed by the process, don't go it alone. Getting the right guidance can make all the difference in reducing stress and protecting your finances. This has been an episode of the IRS Problem Solver. If you have tax problems or want some professional help, make sure to reach out. We offer free consultations, and if we're a good fit, we'll discuss what it looks like to work together. Thanks for listening, and have a good rest of your day.